The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for your attendance this evening, to most of you who are in the US or Europe, and good morning to our friends in the Southern Hemisphere who are all on different times now, because some parts of our countries have daylight saving and others don't. Sage, it may well be that it's good afternoon to you, if so, forgive me. Anyway, folks, great to have you with us today, and all looks good. We've just got a ton of exciting stuff to talk to you about today, so let's get on it. The first part of this is I need to just run you through the usual stuff on the PowerPoint, and I'll just make sure this screen is changing, which it is. So new dates for the tutorial, they're now confirmed. They're going to be 26 to 29 May at the Hilton Garden Inn, El Segundo, Los Angeles. It's a very, very nice hotel. We've had a tutorial there before, and we had a great deal of fun. It's a bit of a blast, and it's just a walk away from Manhattan Beach, which is for those of you who don't know LA, and I must admit I didn't know any of it until Jerry showed me around, but it's a really swinging sort of a little township, maybe 4 or 5 minutes away from this hotel. So they're the set dates now, 26 to 29 May. You'll be able to start making your bookings at the hotel in a week or so, but if you are coming to that tutorial, even though you've written to me before and I have notes of all of you, please send me a fresh email confirming that you will be attending that tutorial, so we can start to put the final list together. And I will be teaching Fractalian at this tutorial. I've actually taught it once before. I taught at Las Vegas, and nobody paid much attention to it, because if you're doing it manually, I think it's just probably too much work for most people. But now that we have it in an auto trade, what I'm going to show you today, I hope will change your whole view on life in trading and the possibilities of what can be done. But anyway, there's our hotel, and there is what you will find if you just let me get this thing to change. Walk about 5 minutes away. That's Manhattan Beach. Pretty nice, but amazing, really, so close. The beauty of this thing is it's only literally 12 minutes from LAX airport, and the hotel does have a shuttle there to pick you up and to take you there. It's really simple, really nice, and Sage is telling me that she does use Fractalian charts every day. I taught it at Waiheke as well. That's right. Not many have, Sage, and that's why you're doing so well, making so much money. Okay, you need to read this compliance statement, folks. The main thing I want to draw your attention to is the third paragraph down, hypothetical performance results and the limitations to it. The results I show you come from programs written for us by Trade Navigator, so they're all computer derived, but they may or may not have a commission in them, and they don't account for slippage, and they don't also account for liquidity. In other words, on computer programs, the computer assumes that it gets filled where it wants to get filled, and that doesn't always happen. So I just draw your attention to that as usual. We do encourage you to take free trials of anything that you see on the Danielcode website that you're interested in. We have a pretty simple policy that we don't like you to get into anything and then say, gee, I don't like this. We'd like you to do a trial, make up your own mind whether it's suitable for you, and if so, then you can go ahead and subscribe. If not, no cost. And the person to contact for your trials is Terry at support@thedanielcode.com. And most of you think Terry's a pretty good bloke. Let's move on from our PowerPoint, and let's now move on to starting to show you Fractalian. I should say, just as a by the by, Shift, hello my friend, Shift's there and Pete's there and Sage. A lot of the locals are here with us today. Don't rush away and leave this webinar, folks, because somewhere through here you're going to see all sorts of opportunities to make a great deal of money, and not by trading alone. I just wanted to say, in regards to Terry, I got a note from a fairly new member the other day who was complaining that Terry is impossible to get on the phone, and I wrote back and said, well, you know, how many messages did you leave and when? And he said, well, he never left a message because he works in the country, and he doesn't take his phone with him into the cotton fields. So, Brian, you know I'm talking about you, and I'm not giving you a hard time, mate, except that you did give me a whack about don't show me 3 days BS. And Shift and Sage would know that I've mellowed with age, that if anyone had said that to me a couple of years ago, you'd been banned for life. But anyway, I understand your frustration. Terry only works for us part-time. He does a mighty job, and he has 3 little children that he has to look after periodically. He's doing that on his own at the moment. His wife, who's a wonderful woman, a speech therapist, is down in South America, left this morning, and she's working with children who have deformed palates and speech difficulties, and she does all this as a mission from their church, a wonderful contribution to helping human beings. So I know Terry can be hard to get exactly when you want him, but I assure you, hello David Knudsen, I assure you if you leave a message for Terry, he will get back to you. If you send him an email, it's an even more sure way of saying he gets back to you. So there we are. Now, I've got a whole lot of stuff to show you, and I'm not sure I've got it all in the right order. I've got so much, but let's run through it. In fact, I just wanted to make a point to you beforehand, because this thing, Fractalian, while it's new to you, it's not new to me. In fact, it's part of the basic program that creates the TO3 signals, which you know, some of you have been subscribing to for 6 or 7 years now. And it is also the program that creates the blue line and the plus signals. So we've been using this in our trading for, I've been using it for probably 25 years, and it's been used on the website for about 7 years. And those of you who've been with us a while will know that we've tested these TO3 plus signals to exhaustion. David Hunt, who some of you know, ran a 1-year trial with a live chat room, and a couple of hundred people of our clients were in there watching it, and he returned about 94% for a year. You can read about that on forum. And more recently, Terry ran a blind trial just using the Genie auto trade over 17 months, and it did the same thing, 7.5 to 8% per month. And I just wanted to briefly show you, I reckon all of you are smiling pretty happily today. You might have noticed that in the last week we've had a huge build-up of blue line signals, and they've just gone on and on and on, and sometimes when that happens, it's indicative of a fundamental change in market. So just be aware of the importance when you see a plethora of blue line signals. I'm just briefly going to run through with you some of the money we got today. This was a blue line buy in Aussie USD, which was very nice. This was the blue line buy in New Zealand USD. There was also a blue line buy in New Zealand JPY, which you can see was elected, made a good lot of money. That was nice. That was I've done that. I've done the New Zealand USD. I'm sure I did that. Nice buy there. Aussie JPY. We had nice signal for that. That was another Aussie JPY. It was a TO3 signal posted for action on Wednesday or Thursday. Look at this, decent lot of money. Euro GBP, I needed to show you. There's another blue line signal that went off today. GBP Chief, that was a TO3 signal that was elected today. all pretty nice stuff, isn't it? Some of the futures to show you. AP, this is the Australian Share Price Index. Blue line buy for today. DX, we had a sell which was elected, didn't do much, but it's on rollover tomorrow. S&P, we had a buy signal, blue line buy signal. There you are, and off it went. It's on rollover on Friday. Remember, on rollover doesn't mean you have to get out of the trade right then. You have anywhere between a week and 12 days after that before you have to exit that trade, but it means that they won't allow you to enter a new, brokers won't allow you to enter a new position in the expired contract. So there was the buy in the S&P, pretty nice. We had the same thing in the Russell, TF, which is here. Really nice, big trade that. Decent little bit of money there per one contract. Yep, almost a couple of $1,000s per one contract. TF, what else did I want to show you? Nifty was a buy, that was elected, made some money. Sugar was a buy, quite small but made money. And the Dow, nice trade in the Dow, made money. So these signals I've shown you actually all come from the Fractalian program or some part of it. So you're actually more familiar with this than you know. It's something we've had for years and years. And very few people have picked up on it. And one of the limitations has been that it does take quite a lot of work to do it properly. I'm going to show you some variations today that I haven't taught before, but I will be teaching in some detail at LA in May to show you just how amazing this thing is. So let me start. I've shown you all those great reasons you should have pockets full of money today. Let us go now to just show you some of this stuff. And this is the program. This is the first time we've actually had a program. Until now, I've done it all manually. This is going to become an auto trade program for you. It's the first part of it's been released. We can make this a lot more sophisticated, incidentally. This is just the first go that Trade Navigator had at implementing my instructions, and this is only the first and most basic signal. We can really make this a lot more sophisticated, but I'm not sure there's any need to. And you know, I'm a Luddite. I don't trust technology, and sometimes simple is best. My mother-in-law, who was a Swedish lady, used to often say, "Simple is best. Simple is best." Well, you know, it's true, particularly with trading. We've got so much going on, and so much going on in our lives anyway, that you know, complex programs that are difficult to run and manage and maintain take away our concentration from what we should be thinking about. So this is really simple. This is a daily program. It works entirely on time signals. It doesn't look at a stochastic. It doesn't look at range bars. It doesn't look at any market patterns. It works entirely from fractals of the Danielcode time cycles, and it's quite extraordinary. And for that reason, nobody else has ever seen it or got close to it, because very few people even know what the Danielcode time cycles are. Mac, will I distinguish between Fractalian and Fractalian? Yeah, I'm doing that now, mate. Fractalian runs straight off daily bars. You don't need a VPS for it. It just works off daily bars. I'm actually going to show you the charts in a while so you can get a feel for it. A lot of the trades are 1 day. You can use it as a day trading system if you want to. Occasionally we'll get a 4, 5, 6 day trade, not often. And it exits first profitable close, just like the TO3s, same stuff you've been seeing for some of you for years and years. It's using fractals of time, so it's not breaking up the bars, so it doesn't have any complexity to it. It's about as simple as you can get. So as my friend Brian said, don't give me any of that 3-day BS. I want to show you. We're going to start by running all of the continuous 067 contracts that Trade Navigator have, some of which are tradable by us, others are not. You'll see right at the top of this, once it starts to run a bit, you'll see some figures in the $3 and $4 million range. Don't get excited about that. They're Japanese markets, or the COS is actually a Korean market. So that 4 million Japanese converts to a Japanese yen. They've got the dollar sign in front of it. It's actually yen. That converts to about 36,000 US. And similar with the COS, the KOSPI, the Korean KOSPI index. It's actually that figure with a dollar sign is in fact Korean won, and that converts to about 15,000. So don't go overboard about that, but you'll be able to go overboard about everything else. So we're going to run this for a whole year to start with, you'll see this unrolling. It takes a few minutes to get through this, and then I've got other stuff that's also going to take a few minutes to get through, a lot longer than this. You can see this just scrolling down in front of your eyes now. So these ones up the top here, these are all Japanese. Those are all foreign contracts. If you want to trade Japanese index or securities or any of those markets, you can using this program, and these figures convert to about 35,000 per year on those markets. So from here on down are our markets, and there's about 38 to 40 lines on each page. So you can see that if we scroll on down, this is the column you're interested in, net profit. This is per one contract for 1 year. And you can see that we have just a whole lot of markets that are running at, say, let's say $4,000 or better, which is on most of these markets, that's 100% on margin. As you'll see, I have a more detailed presentation for you. And we have a whole bunch that are several 100% on margin, and some that are in the 1,000% on margin. Just taking a quick look through this ZD, that's the Dow Jones. That's not the mini contract. It's not the big contract. It's the DJIA contract. NK3, this is the Nikkei Dow. This is the Nikkei 225 traded on the CME. Soy, for you, Daryl Kaur, my friend, that's a South African index which you may be interested in. PA is palladium. I have an apology to make. I get a bit dyslexic about palladium and platinum, and in the blurb for this webinar, I think I referred to platinum. PA, of course, is palladium. PL is platinum. So you can see as we go down here, these are all quite extraordinary results, and that is 12 months of data. We can then look as we go on at earlier amounts. We can look at 2 years, 3 years, and I'm actually going to show you today 3 years data, because I don't want Brian to write to me and say, don't give me your 3-day BS. We'll give you the 3-year stuff instead, mate, and you folks can decide what you think of it all. It's very, very interesting. So here's a very simple program. We can get all sorts of things out of it, which we'll start to do now. And let's now just go to something that's a bit closer to home so I can show you some of these variances. And let's just go to the markets that you're more used to. These are the Fractalian markets that I just happen to have a list of them here. So let's just run them. And basically these will divide into half. About half will be profitable, and about half will appear not to be profitable. Now, remember I've just said appear, and there's a reason for that, that with this program there's a lot more in it than you actually think. So just running down from the top, you can see coffee's our best market, made 40,000 for the year. PA is palladium. Oil, natural gas, that's feeder cattle, GF. LE is live cattle. Gold. AP is the Australian share price index for you Aussies who want to trade in Australia. Wheat, sugar. RB3 is gasoline. HE is hogs, live hogs. They don't call it, they used to call it pork bellies. Now it's called hogs, live hogs. And it's a story that's always told to budding futures traders that it was so volatile back in the day that I can remember it going down, limit down, lock limit down. You couldn't get a trade in or out, and it was down for 24 days, and a lot of people got seriously smashed with it. I don't know how liquid it is now, but it's a lot better than it was. So here are the obvious ones. You can see, you know, coffee, palladium, oil, all these ones making big money, and we'll go and relate that to what the actual margins are. But it's pretty interesting to look at the ones that appear not to be so worthwhile. So if, for example, we have a look at, let me see what I'm looking for here. Let's start with wheat's a good idea here. You can see that it's shown as making $5,688 for the year, and that is pretty attractive when you I just have to move something here, folks, bear with me. I've got so many things hidden on top of what I want, but the margin for wheat is pretty small. I was trying to find it for you, but it's not much. So have a look at this. So you say 5,688. Okay, so let's go to the reports. Now, Chuck, this is part of what you've been asking for. You've been asking for equity charts on FractZen. We can't do them on FractZen because the bars are broken up when we create FractZen. But for this market and all daily markets, we can. And here's this particular market, and if you want to have a look at a chart, there's your chart. You can see the pretty pictures, and you can see everything else that they provide you there. But for this market, we started off by saying it's made 5,600 for the year on a pretty small margin. Pretty nice. So let's look at that a little bit closer. The long trades, it's a couple of thousand. Short trades, it's made a bit more. Let's have a look. If we have a look what happens, and you can do this. This is a standard trade navigator function that all of you folks can do. Let's see what happens if we look at what happens by weekday. And that chart's now changed, and you can see 5, 6, 7, 9,000 is made by trading on 3 days of the week, Monday, Tuesday, and Wednesday. Don't trade this market on Thursday and Friday, and you'll improve that 5,800 to a bit over $9,000 simply by selecting the days of the week on which you want to trade. And it's the standard trade navigator function available to all of you, and we can really set up some time to make sure that we're showing you this stuff on a regular basis, updating it, getting it up on the website if you have any problems there with it. Let's have a look at this market here. This is gasoline. Let's do the same thing. Let's go to the reports, and didn't make much money, did it? $3,000. That's no good to us. All its long side trades were failures. 15,600 it lost on the long side, and it made 18,000 on the short side. Pretty nice. Me, I'd be just taking the short trades until I saw some reversal in that pattern. And then we can go and look at that on weekdays, and that tells you that there are really only 2 days of the week worth trading, Tuesday and Thursday. So we can go back and let's look at some of these ones that were even less successful. So let's go and look at the E-mini, and there's quite a story about this, excuse me, which I'm going to tell you. Straight off the E-mini contract, it shows a loss of $2,988 for the year. So let's dig a little bit deeper and go to the reports. And we can see that on the long side it didn't do terribly well, and on the short side it didn't do terribly well, and that's because it's got a very strong bias within the day. So if we go and look at this same contract by weekday, you'll find that if you traded 2 days of the week, Tuesday and Friday, you got that return was there, $8,500. So simply doing that, you've been able to convert a loss of $3,000 into a profit of $8,500. That's nearly a $12,000 turnaround. So this is quite extraordinary, is it not? So let's see what else we've got here. Let's have a look at this little fellow. This is Hogs, which lost money on its face value. Let's go to the reports. Live Hogs, no money on the long side, no money on the short side. Wonder why? Let's see if there's any bias in there. Well, there it is. By trading 2 days a week, you turn that into a $6,000 return just by selecting the days of the week on which you wanted return. So close enough to 246,000 profit. And if you look at the overall, you've converted a $1,040 loss into a $6,000 profit. So you've converted that into 7,000. It's a turnaround of 7,400. Almost all of these the same. I'll give you one more example just to show you. This is the Russell. No good on the year's accumulation. Long side it lost money. Short side it lost money. So before you abandon all hope and say, I'm not going to trade the rotten thing, look what happens if you just go and look at your weekly analysis. Huge bias on Friday. Okay, pretty good on Monday. So you're now up to 7,700, whereas the total altogether was minus 16,000. So that's about a $23,500 turnaround. Okay, and I'll deal with all these questions at the end. Are they regular? Good question to ask. Well, the question is just really to see how regular they are. We go to our weekday here. We can see the number of trades. That's 33 trades on the Monday, 34 trades on the Friday. You're looking at 70 trades. There's about 224 trading days in a year. So that's about 30% of the trading days. Is 70, 67, nearly 70 trades a fair sample? It is for me, but if you don't like that, you can run this back further. You can test 18 months, you can test 2 years, you can test 10 years. You can take anything you like. You know, one of the questions that's just come up now is, how do you know this isn't random? Well, you only know it's not random by the size of the sample. So if you want to do this exercise and build it out from a year to a year and a half to 2 years to 3 years, you will see a continuation of the pattern, or you might see subtle changes of the pattern. I mean, markets are dynamic. They're driven by human nature, which itself is dynamic. And if that worries you, don't let it, because you don't have to trade any of these markets. You can just reserve your trading for the markets that are all the time profitable. So let's close that, and let me take you now to a bit closer analysis of this stuff. This is should have changed by now for you folks. Should be coming up any moment. Right, you should be looking at a new spreadsheet now. And this is taken from that printout that you just saw for 2014. And what we've done here, I had a talk to Jerry yesterday, who's with us today. Hello, Jerry, how are you? And we put an asterisk against the markets that Jerry's happy with and likes to trade. But these are all markets that I think you should consider. And just because Jerry doesn't like them for one reason or another, doesn't mean that you should rely on that advice solely. He's a very knowledgeable guy, but he has his little prejudices as well. But these are the markets, and here you're looking at the win percent, the number of trades. You can see this is a trading system. These markets are trading about once every 2 days, or sometimes even more than that. Here's your net profit. This is alphabetical, don't forget. These big numbers here, these are the big contracts. This is the mid-cap and the NASDAQ. They're the big contracts. You've got to divide that by 5 to get the equivalent for the mini, were you to use the entry and exit numbers from the big contracts. Now, that's going to be a problem going forward because they're about to close the pits at the Chicago Mercantile Exchange. And in fact, I think I have I don't anymore. I had an article that Jerry kindly sent me, and there was a meeting at the CME a few days ago, and the powers that be told all the brokers they were going to close the pits, and there was a real uproar about it. And the people who make their living from trading in the pits with all the little perks that gives you are very upset about it. But anyway, that's what's going to happen, and we're going to lose the benefit of having those pit prices. And those of you who've been with us a long time know that for many years I used to create the entry and exit signals for S&P and NASDAQ from the big contracts until I got sick of answering emails about why they couldn't see those prices on the minis. But the big contracts, this will be heresy to most of you because they're hardly traded at all, but the big contracts actually had a much more exact price. All the noise and the HFT stuff is going on in the electronic mini contract. So let's see what we've got here. These are anything with an asterisk, the one that Jerry likes. I like a lot of the others too. And you can see we've got the Australian share price index, crude oil. Japanese yen now, Shift has been trading, instead of trading Forex, he's been trading currency futures at the CME, and that's what these are here. And I've got for you what the profits are, and I've got for you what the margin is. And you run down here, gold, there's your gold trades, guys. And feeder cattle, heating oil. Gas, oil on ice, that's a new market, very good market. Yen, orange juice, coffee, you can read all this as it goes. And I'll just scroll down so you can get to the end of what we've got here. Ethanol, which is a very, very big market, has a variable margin. So that'll be way up here somewhere. Let me see. Where has it gone? Here it is, ethanol. I've put in the margin here as 6,000. In fact, on ethanol, it varies from 6,000 down to 3,000, and it varies by the time of the year, those margins. So I've shown it the worst way anyway. And as well as that, folks, you can see here what these percentages are. And these are the percent on margin. And I told you I'd show you a good lot with massive returns, and you can see them here. These are all over 300%. You guys in England, these Liffey contracts, and there's a few others here I haven't shown, they have very small margins and they're very, very profitable. But I mean, we just got one after another here, over 300%. And some of them, in fact, which will be the English contract, because that's in fact an Australian contract. That's the Australian T-bonds contract, over 1,000%, 700, 700, 400, 300, just absolutely massive returns. And in the next column, what I put for you is what you'd estimate, just convert those, divide them by 2 to get a rough estimate of what it would mean in your account, because most brokers like you to have twice margin in your trading account. And then knock off a bit more because this model we're looking at here has commission at $5, and you'll probably be paying a little bit more than that, and also you've got to account for slippage. But do that, and on any reading, these figures are just truly amazing. So let us now take a longer-term view on this and show you a bit longer about, for those of you who are nervous about making decisions on whether this will continue to go on or not. Let's hide a few of these so you can get a good feeling for it. And let's now show you 3 years data. So this is 2014, 2013, 2012. And you can see that there are a good number of these contracts that have had profits for every year. There's a whole bunch of them, in fact, and that might give you more comfort that this level of stability goes on and on. In fact, it doesn't. Markets fluctuate. They'll as volatility comes into them, they get better. Volatility goes out of them, they get worse from a trading point of view, and that's just the truth. But if it makes you comfortable, you can just look at these markets where you've got 3 years of data, or we can show you 4 years or 5 years, whatever you need. You can see, I don't know if I've still got it here, I did have cotton in here. Cotton's had a really bad year in 2014, but it's been so good in previous years that it's one I'm looking for it to make a comeback and really be something worthwhile. So we'll put together packages of this stuff, and we'll give you the, you can have the any 8 contracts you want for $4.99, same as with Fractalian, and then you can buy one or all or any of the others for $75 each after you've done your trial. Now we have to settle on which of the markets we're going to switch on, and they're basically going to be the ones that have the asterisk on them here, plus maybe a few more, and they will be ready. The auto trade version of this will be available 1 week from today, so please let Terry know if you'd like to run a trial on this to make sure we can get you switched on as soon as the auto trade starts. And we'll start off your trials with the package of 8 that basically Jerry and I will select for you, and we'll also be running all of these other markets. Pretty well everything you can see here we will have available. So you guys who want to trade in UK or in Europe, we've got a lot of other markets as well. We'll show you those, and they'll be available for you to trade as well. Main thing being, it's really simple system. It doesn't require a lot of support. You can run this on your own computer. The only thing is, as always, you have to make sure that your data stream stays connected. If it doesn't, then you won't get the data. And that's the same for everything. So, you know, here's a way you can look at the 3-year performance of these markets. There's Japanese yen, there's gold, pretty interesting gold, good year in 2014, pretty nice in 2013, disastrous in 2012. Why? Well, if you went and did the, check the long side and the short side of that, and the days of the week, you'd understand and see the bias, and even that loss of $19,000 on face value turns into a very nice profit once you understand those more intimate details of it. Orange juice, Jerry doesn't like it. I used to trade it. I thought it was great. Brokers don't like orange juice because it has massive volatility when the crop reports come out, and there's been a frost overnight. I mean, this thing market goes berserk. But for us, we love volatility. The more berserk it is, the better it is, which is a view that brokers tend not to share. And even coffee, our very, very best market, you can see it had a pretty ordinary year in 2013 on face value. But when you go in and do the analysis of the day of the week, that turns into a decent profit as well. So all of that is available for you folks. And we then need to move on to the next issue, which is shifting markets. You can see that the big contract, here's the big S&P, and the mid-cap is hardly traded at all. MD I'm looking for, that's there, and of course the NASDAQ, which is in here somewhere right there. Okay, those are the big contracts, and they've done very, very well. You have to divide those net profit figures, divide them by 5 to get the equivalent in the E-minis. But the way to trade those is to perfectly, I've already shown you how you make money out the E-minis, but the way to make this even better is we use the entry data from the big contracts to create the signals for the E-minis. Now, we haven't done that yet, and it might take months and months. Trade Navigator try to help us, but when we give them a request that's a little of a bit of a curveball, it can sometimes take a lot of time. But just keep in mind this number here, because I want to show you something. This is the big mid-cap contract, made 130,000 in 2014. A lot of money. Divide that by 5, it's still a lot of money. And then let's go and have a look at what that actually looked like. And I'm going to just show you the Fractalian chart here so you can get a feel for how this works. This is actually a Fractalian chart. And you can see what happens here. You sold that market at this blue, the diamond, you got out at the red. You sold at the blue, you got out at the red. You sold at the blue, you got out at the red. And you can see that all of these trades, the reds are buys, the blues are sells, incidentally, because that's the way I have my stuff. I know it's upside down, but we can change yours around. You can change yourself if you want different colors. But you can see these are nearly all 1 to 2 day trades, except for this one up here, which is January the 22nd. We got short towards the bottom of this bar on January the 22nd. 1, 2, 3, 4, 5 with 6 days before we got the first profitable close, and we got out there, made a lot of money. So you can see this is very much like the plus signals, the daily TO3 and plus signals. It just goes on creating signals and harvesting a bit, having a few wins, a few losses, and occasionally it has a jolly big win, and that's how it makes its money. Okay, so I wanted to show you that. More importantly, I wanted to show you something quite extraordinary, and this is the S&P mid-cap. This is the pit session, which is going to be abandoned, and you can see why they abandon it. They're going to abandon it because no one's trading it. So really all you've got there is a series of dots, and those dots are closing prices. So that 130,000 that this market made is working only off closing prices. And that's pretty interesting. And the theory is that markets open and there are buys and sells going on all day as the market's trying to work out fair value. And the theory is at the end of the day, the close of the market will give you the best estimation of fair value when all the news of the day and everything else has been digested. So if you run this thing only on a close-only chart, it does brilliantly, just absolutely brilliantly, and that's the actual chart that made 130,000 in 2014. So sometime along the way we might think about having a look at a version that runs on close-only and see if we get any different results. But anyway, there's more than enough for you there to think about now. Okay, so let's have a look how we're going for time. We've got about 10 minutes left. That's Fractalian, folks. Read, learn, inwardly digest. Send me emails about any questions you have. Let's just deal with the Fractalian questions before I move on. I've dealt with most of it. How do you control the day of the week trades with auto trading? You can. I'm told by Trade Navigator today that you can set that manually in your Trade Navigator program, and we'll get a video done before you'd start doing trials, so you can see how to do that. It's apparently a built-in function of it. How does it differ from Genie? What are the trading rules? Well, it is different. Fractalian is a part of the program, Brian, that creates Genie, but it is different to Genie. Genie has other rules. Genie, for example, looks at stochastics, various speeds of stochastics. This does not look at stochastics. This looks only at the Danielcode time cycles, the fractals, the smallest part of the Danielcode time cycles. And for those of you who haven't already and you want to know how this all works, go to the Danielcode website, click on articles, and scroll down until you find there are 2 articles there. One is called Masterclass 1. It's about time, and the other one is called Masterclass 2 Trading Gold. And they are both articles, very open, very transparent, detailed articles. You probably need to print them out and read them a few times, that show you how the Danielcode time cycles work. And once you understand that, you can just look at this as fractals or fractions, if you prefer, smaller parts of those time cycles, but in a fixed and rigorous schedule. Okay, so that's what I have for you there, folks. Let me go to a few charts. I've had a few queries. Let's see what we've got here. Most important, we bring you up to date on some of these charts. This is Aussie USD, incidentally, folks. This is going to bottom down around this 73 cents. You can see the Reserve Bank's been suggesting 75. The number's going to be, I think, very close to where the red line, which is a 4 seal line, it's actually a 5th seal line, I think that one, intersects with the 74% retracement at 73.15. I think we're going to see some substantial support there. A gentleman wrote to me and didn't give his name, and he wanted me to look at a number of markets for him. GBPUSD, not a whole lot to say about this other than this was the crash down to a couple of Danielcode 4th and 5th seal lines. Really, this was the clue where the market had been to before. We had this as a massive sell signal, as you can see. And where's it going to go now? It's going to do what it did before. It's going to rally up and wander around. But these markets, once they've been hit by an event like that, they sometimes take weeks and weeks to recover any decent structure. This is actually a 6-day chart you're looking at, but anything with the chief, the Swiss franc in it at the moment, it's just carving out pretty small bars. It's basically on life support and trying to get itself back to feeling good. The next one, this gentleman asked me for, Nathan, I don't think I've got EURAUD ready. I looked at this briefly, the CADCHF, same thing, it crashed down straight into its 5th seal line. This is actually just almost a trend line if you look at it. It's not a 4 seal line, it's a 5th seal line, because it's basically just capturing this trend through here. And pretty interesting that what appeared to be an emotional and very dramatic moment was so well controlled and organized. It went exactly to the logical extension of where that trend line had been built. It's the same thing. It's in intensive care now and trying to recover. It will wander around. They're not great markets to trade when they've been shocked so badly. The next one this gentleman asked about was EURAUD, which is here. This is an interesting market. It found its top. This is a 4 seal line here, and it found its top just about the close, was about right where it should have been, and it's now pulling back, and it's now attaching this 1371.6. That's the 50% retracement. Basically, the depth of the retracement is another way of looking at trend. As long as this market trades above the 59%, 133.23, that's a 59.3% retracement, we actually consider the trend is up, and this is a consolidation. And this is a 12-day chart, so that may take months and months to resolve, but if not, it will find support further down at those Danielcode numbers. There was one other he asked me about, and I didn't get to it, but I did show you the Aussie USD and tell you where that's going. I wanted to just update you. I'm running out of time, but I want to update you all on the S&P. Here's the Aussie USD. We've talked about that. That's where it's going to go, down to here. Daryl, I know you're interested in that. I wanted to update you about this, the S&P. There's that, and we've got another chart which might show us more. This is the one here. Let's get rid of some of these bars so it's a bit easier to see. And you can see that what's really happening, this 2100 was actually my forecast for December, and it didn't get there. It did get there in February and a bit more. But really what's been turning this market has been this median of the Danielcode trading channel, and it's also got a couple of fourth seal lines, and it's just been running up that between those two resistance levels like you wouldn't believe. So all we've had so far is a very weak pullback. It's simply broken through one standard deviation, which is normal. It does that all the time, and we've got contract rollover coming, and the best time for trend changes in these markets is contract rollover. In the equities markets, you will see that happens all the time. It's time to be really on high alert. The probability is that this recovers its losses and goes on to make more highs, but you may get a rally up to the old highs, and if it doesn't take them out, then we may see some exciting action to the downside. Let me see if I can find you the other chart. Here it is. This is the S&P index, and this is what's been holding this market back. You can see we had this fourth seal line going from way back here to 2009, 2010, and this market's just been bumping its head against that since July 2014, and it's just been bumping its head. Little close above it, went down, same thing, break, go down, closed on it here, and it's now at a stage that this fourth seal line is also running where the upper one standard deviation is. So that is very, very strong resistance at the moment, and we'll see what happens, but be really aware and thinking of possible major trend changes around the time of the around the time of the contract rollover, which is pretty well tomorrow, I think. The equities that don't actually roll when Trade Navigator predict lately, they've been the last couple of years, they've always been a week or two after that. Now let's see what we've got here. I've got you there, gold. I guess you'll all want to look at gold, see what's happening there. Had a nice little break, took out the lows. I have to expand this so we can see what's happening. You've been seeing this chart, folks, on and on and on. What's happened now, it's broken through the 1160 black line, so we can take that turkey off, and the new low makes those wrong, and it's now got support from this 1149.90 black line, which is the last support within this whole swing, running from November 2014. This whole swing, the last line of support is this Danielcode black line at 1149.90. Now the black lines are very, very powerful, and that's the last level of support. It works a bit differently to other support and resistance levels. We would require a close below 1149.90 to say that next the old low is going to be taken out. But it's trying to consolidate at the weakest possible point on the chart. There is nothing here to talk of explosive upside action and drama. But that is all we have time for today, folks. But next week I will get some up-to-date stuff of the S&P for you, and also for gold, and anything else you want. If you'd like to send me an email. Mr. Top Gun, can I add the four seal forecast and long-term trend charts for Forex? Well, I can add I can update the long-term trend charts, which are again overdue, but you won't see the four seal lines on the long-term trend charts. They're a subscriber item, apart from when I talk about them in webinars. And if you'd like to see those, you can for the futures markets that we cover. We're not at the moment covering the fourth seal on Forex. We simply just don't have enough hours in the day to do that. But I'll certainly see if there's anything interesting when I update the long-term trend charts. So thank you, guys. Have a look at this, please. Who we got? We got Shift. Shift's coming for the tutorial. Provided Sage, Mustang, Mo, Callis, and Frank are there. They'll all be there. Frank will be there. Sage and Mustang probably be there. Mo, I don't know. Mo might be got so old now he can't find his way there. And as for Callis, Well, you've got the spy view. You've got the spy view there, mate. See if he's up on the veranda anymore. Okay, so I got lost. Very funny, my friend, Shift. That's it. Have a look at this, guys. Any of you who are finding Fractalian Pro too complex, difficult, what have you, do have a trial of this, please. It's quite brilliant, the Fractalian. Very simple. There was one other thing I hadn't shown you that I do want to show you. So let's just have a look at these. We looked at all these before. So let's then just say, what has it done lately? So let's change this and see what it's happened in the this year to date, January, February, March to date. And we can just run the same markets for this 3 months, and you'll see much the same thing. Half of them have done well, half of them haven't, and even the ones that haven't, if you go and look at the report on them, we should see some bias. 6,000 loss in oil, long trade negative, short trade negative. What happens by weekday? Have a look. You didn't want to trade on Thursday, did you? If you avoided trading on Thursday, you saved yourself $15,000 of losses and turned an apparent loss into a profit. So, you know, that's a wonderful tool that you can use, and you can pump in as much data as you like until you feel comfortable with it. Looking at this small number of trades that happened just in 2015 wouldn't give you much confidence about it. But you know, you can pump in another 6 months data. You can pump in 9. You can just keep pumping in data until you say that's sufficient data, I'm satisfied, and trade from there. So wonderful tools, and these markets, the results are often very much better than they appear to be with this one simple tool, which we haven't been able to make available to you before, because even though we've had Fractalian for years and years, we haven't had this program to show it to you in a methodical way and show you the daily bias that affects all these markets. Mike Mitsos, is the tutorial in LA confirmed? Yes, it is. Look forward to seeing you there, guys. So shoot me a line. And who else have I got that I haven't answered? Will you have a list of the futures that we can trade somewhere? Yeah, I've got a full list there, Scott. I thought I showed it to you. I'll put it back up there. This is the list. We'll get this up on the website. You can see it ends with wheat there, and they're pretty much the ones that I think are tradable. The ones with the asterisk are the ones that Jerry thinks are tradable. So I've answered that. Top Gun, I've answered. Mac, thank you, my friend. Shift is going to get his mates to come to the tutorial. Daniel Samuels has got that. Scotty, thank you. How do you sign up for the tutorial? Mike, just send me an email, jneedham@thedanielcode.com, and I'll let you know the arrangements, and we've got discounted rates for you all at the Garden Hilton, and I'll be in touch with you about all of that. Next week, I will actually put the syllabus and more details about the webinar, about the tutorial, up on the website, so have a look at that. We'll probably email it to all of you as well, but I didn't want to overrun Fractalian, because I think it's a vitally important product for the future of your trading. So thank you, folks. We can go back, revisit this stuff again and again and again till you're really comfortable with it. And I do thank you for your attendance today. That's about the end of us. We've only gone about 6 or 7 minutes over time today, and I know you'll forgive me for that. So thank you. Enjoy the weekend. It's actually, you've got another day to go. It's close to midday Friday in the land down under here, and it's about time for me to head for the swimming pool and a couple of Bloody Marys shifts. So if you haven't already started and you're down south and the land's down under, get straight into it. Okay, thanks for being with us, folks, and I'll see you next week. Any questions you've got, drop me an email, jneedham@thedanielcode.com. I don't generally get around to replying them the same day, but I promise you I will reply to them. and look forward to seeing as many of you as possible at the Los Angeles tutorial, where we'll have 3 days that you can talk to me about anything, including any little quirks. You can see how a bit of extra knowledge can convert these trading programs into something very dynamic, and a lot of that is what we do at these tutorials. So I bid you good day. Thanks for your company. I'll look forward to seeing you at the next webinar. Bye-bye.